Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Monday, April 20th, 2015. The markets today are all going up to just getting back again within their sideways formation, and all this rebound has been due with the Chinese central bank decision that decided to cut its bond reserve ratio to 18.5%. And the effect that this decision has is that it actually allows Chinese banks to have more liquidity, $200 billion that they will have, and they will be able to use that money to make new loans, and this will be a way to stimulate growth. So when we talk about these measures that should yield some good growth numbers in the future, according to investors, well, we have markets that are having a rebound. So if we take a look at the situation here on the NASDAQ, we're just back again within this neutral formation. If we take a look at the situation here after the attempt that we made on Friday to start a bearish cycle. Same thing too on the Dow Jones, where we are in the same situation to retest again this resistance. Actually on the Dow Jones, we had some good numbers coming out of Morgan Stanley that beat analysts' estimates. So far, banks have done pretty well. And also if we continue here in the TSX remains neutral, but still it's in a situation where it could definitely start a bullish cycle in the TSX. And I want to bring to your attention the Venture Index, which is right now testing a triple-time test, a 4th-time tested resistance here on the Venture Index. So what I'm going to show you, I'm going to show you a list of some stocks on the Venture Index that could definitely be interesting, be buying signals if ever the Venture Index can at least go above 710 points. So we are at a situation where if ever we have a new cycle, there will be some nice breakouts. And among those stocks, there's already CXV on the Venture Index that is clearly breaking out today, right? There's Poet Technology that could be a breakout higher than 171 for a target of $2. Pivot Technology, PTG on the Venture Index, if it could go above 52 cents, that would be interesting. And Greenville Strategic Royal higher than 85 cents will definitely be interesting. So we do have all those stocks here that could break out on the Venture Index if ever it does make a new high. So I think the Venture Index, there's a lot of stocks that you should put again on your watch list. Concerning the TSX, though, there are 2 sectors where I'm going to focus my attention here. First of all, it's the energy sector. We have oil that remains neutral, but the energy sector is a sector that could resume its bullish cycle. Let's start with the stocks that already broke out today. There's Stricken Well Services, that is a breakout. Whitecap Resources as well, that is a breakout. And some stocks could break out, such as Paramount Resources, higher than $38. Legacy Oil and Gas, higher than $2.75. Imperial Oil, higher than $55.50. So all those stocks you see that are highlighted with an S, TGL, IMO, LEG, POU, are all stocks that could break out on the energy sector if the sector resumes a bullish cycle. But so far, it's not doing so. And on the Canadian side also as well, another sector that remains strong is the financial sector, with several banks that are pursuing their rally and are helping the TSX. But so far in the financial sector, there are no breakouts. So there's definitely not a lot of opportunities to open new long positions on the financial sector on the Canadian side. So in the next segment, what we're going to do, we're going to take a look at the utility sector in the US. This is the only sector where we do have a sector movement, and also some stocks in the maritime and transportation sector. But all this is going to be in the next segment. The next segment. So let's start with the utility sector. On marketgurus.tv that you can have access for free for 10 days, we have published a list of the stocks in the utility sectors that are breaking out. So let's take a look at some stocks. I'm not going to show you all the list, but some stocks among that list. First of all, you have to take into account that the sector remains into a neutral cycle as long as we remain within that side of information, but there's starting to be some movement on the sector. If we take a look at this, there's already Aqua America that is clearly breaking out. American Waterworks that is breaking out. So if you buy that stock, exit point 53.50. Dominion Resources, it's not a breakout because the breakout occurred on April 15. So I mostly consider it as a pursuit of the bullish cycle. And Duke Energy, it's also breaking out. But Duke Energy, it's a nice sideways formation, and we broke it out today on Duke Energy. So there are several stocks that are breaking on the utility sector, but the thing is that by taking a look at the utility sector here overall, yes, the low interest rate environment is positive for the utility sector, but it's a sector where it's a slow mover, where we do have sometimes a lot of false movement in the sector, especially when there's the Fed announcement. So by taking a look at this sector here, you can build up your long positions right now because there's some stocks that are breaking out while the sector remains neutral. But if ever the sector can go above 225, 226, that would be definitely interesting for the positions that you're buying today on the utility sector. And your exit point has to be if the sector goes below 215 points. So yes, there are some entry points in the utility sector. I've shown you some stocks, but all the full list is all published on marketgurus.tv. Now, also, the maritime and transportation sector, it's neutral. There's some stocks that could break out. There's NAT. NAT, it's a stock that we still have on our watch list on marketgurus.tv in the analyst shorts portfolio. We're not sure if we're going to put that stock as a breakout. It could be just the pursuit of the bullish cycle, but that's definitely a nice performer. For those of you who have not been able to get that stock here on March 18, when I made the YouTube Chronicle and when we talked about it on marketgurus.tv, I still think that it does represent an opportunity to get in today by putting your exit point at 1250 whenever we reverse this upward trend. There's TK Tankers, not so much. And elsewhere there's Ship Finance. That's a clear breakout there on Ship Finance. We had a sideways formation. We're clearly breaking out today. And Sea Sands could be watched, right? And Scorpio Tankers higher than 992. So it's not a situation where we have markets that are in a buying situation today despite this rebound. This rebound is due to speculation that the Chinese growth numbers are going to be positive after the Chinese central bank has adopted those measures. But they have already adopted a lot of measures in the last few years, and those measures have not definitely given the growth numbers that investors were expecting. The latest GDP reading was the slowest growth that they've registered since the crisis of 2009. So those are definitely something that you have to be cautious of, because even if we have a rebound, the sectors that were in a bearish cycle last Friday just became neutral. So those of you who've opened some short positions on Friday on the markets, you should not close those positions because markets remain within their big sideways formation. So what we have right now, we have a situation where you should continue to hold to your positions. Put some energy stocks in your watch list. Put some also utility stocks where there's some buying opportunities here and there. You can start to build up your long positions. And on the gold sector, which is a sector I'd like to take a look at with you, well, the gold sector is a sector that remains negative because gold is testing its support, but the sector so far is still in its congestion zone. We made a chronicle on the gold sector on the YouTube Chronicle last week. We also posted a Facebook post about the gold sector, about our targets for the sector. So I invite you to take a look at this Facebook post and also at the YouTube Chronicle that you can have access through our YouTube channel. And on the sector though, there's a lot of stocks that remain neutral, but so far there's definitely no buying signal. There's data gold that we still have among our analyst shorts portfolio. The stock remains at risk, but as long as it doesn't go above 1132, which corresponds to all those moving average, there's no need to close that long positions on data gold. So we're going to continue to monitor that positions. Elsewhere, there's Kirkland Lake Gold, which becomes neutral, higher than 615. Barry Gold only higher than $16. Agnico Eagle only higher than 37.80. So gold stocks, just like last week, remains a sector to be watched, to be monitored. So far, no agreement has been reached between Greece and its creditors. So we're waiting to see what's going to happen there. We know there's some discussions that are continuing to be outgoing, but gold sector remains neutral. Energy sector remains neutral. Only the utility sector is standing out with some breakouts, but as I said, it's only a way to build up your long positions in the sector because it's a sector that's a slow mover and that tends to move either on the upside or on the downside depending on how investors interpret the comments by Janet Yellen, because whenever they're going to consider a rate hike sooner than later, a sell-off in the utility sector. So that's the risk that you have on a sector like that. In the next segment, we're going to take a look at your questions, and also we're going to take a look at some news to finish the show.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. Now let's take a look at some questions here that we have. We have one from Sarah here. Is it a good time to buy XTC? Let's take a look at XTC. Well, XTC, is it a good time to buy it? There was a breakout in XTC around April 16. Getting in today, getting in a second or third day movement, but you know, the rally since the breakout has been so little that I still think it's an opportunity to get in because the stock is still maintaining its upward trend. There's still a lot of resistance there at 1574, which is going to be tough to break, Sarah, but I still think that you can trade a stock like that. Your exit point has to be at 1450 on a stock like Xcode Technology, but you're getting in on a second or third day movement around this area where there's a top. You might have a lot of congestions on the stock because it's overbought, right? But so far, the technical indicators are still positive on a stock like that. So I wouldn't mind, except you getting in a little bit late. Now, BIN The thing is, look at BIN, it's by putting a retracement from that bottom to that top, we're reaching an important point, right? This corresponds also to a support. However, on BIN, I think you definitely, when you have a stock like that, you need to see at least some sort of stabilization phase on BIN. So the thing is on BIN, first, we have a pursuit of the decline for the last few days, but so far, there's no stabilization phase on a stock like that. So I think it's kind of premature to get into a stock like that. If we do have some sort of a stabilization phase, that will confirm the strength of that support. All right, first thing. Second thing, look at here for the 923 stochastics. Try to see if it can be around this range here. That will confirm that there's a wave of buyers who are coming in on a stock like that. Also, see if while we are going up or stabilizing, see if we could at least have the 30-day that stays above the 50-day moving average. Or if we don't have that though, Sarah, I still think it will be kind of not a good strategy to get into a stock like that, because to believe that the stock had some upward momentum and can sustain this upward momentum, you also need to look at if the short-term moving average can be above the longer-term moving average. So right now I'm saying that on this decline, the 10, which is in red, is going below the 30-day, and the 30-day, which is in yellow, could go below the 50-day, which is in orange. So that's something that's negative. So this is why I think that, first of all, you need to see, can we stabilize at this support? Can we have a stochastics around the 30% range? And can we also have the moving average, short-term moving average, that can stay above the longer-term moving average? And that would be a signal that, okay, we're starting to have a stabilization phase. I might get into a stock like BIN by putting my stop loss slightly below that support, because if we do go below the support of 33.64, well, the next target now becomes 32.50 on a stock like BIN. So Z has a comment here. You need someone to warn you when the show is about to end. Well, actually, we do have a system there, but today there's a slight problem with the system. But I know it doesn't look nice. I apologize for that, but we're gonna make sure that we always this system always works, because sometimes that gets me confused, and if the show is not of quality, well, I apologize for that. But we do have that system. Now, PGC.A have a correction of 7% on Friday. PGC.A, okay, is it a buy between 25 and 25.50? Well, it's the same thing as BIN. A stock that has been going down for so much needs, first of all, to confirm a stabilization phase. Yes, we're testing this 200-day moving average, but it is not yet a clear support that we can believe in. We do not have a stochastics around the 30% range on PGC.A. Yes, in the longer term, we're testing an important upward trend there, but there's still a risk that we might even go further down, because we cannot say that one day of rebound is enough to say, let me buy a stock like that. So I think around 25.50, as you mentioned, Anne, is a point where we could have a stabilization phase on PGC.A. As a buying point, I think what I'd like to see is at least the reversal of this downward trend, so at least above $26, then I might consider PGC as a buy. I think right now we're going to form a stabilization phase. Before you can consider that stock as a buy, you need to have a clearer confirmation, at least for 2-3 days, that we can stay there. And that will confirm the strength that this important upward trend on the long term, can it be a point where that could trigger a rally that we had in the last few years? So if we do not have the stabilization phase, I think it's kind of premature to say that it's a buy at this point. As for the best day trade of the day, it's that stock here, BOIC, on NASDAQ. Since 10:30, sorry, it was recommended in marketgurus.tv. So you have one entry point here, one there, and another one there. So 4 entry point on a stock like that. BOIC on NASDAQ has been our best pick of the day. Today, overall, folks, markets are encouraged by the news about the Chinese central bank decision, because there will be more liquidity in the Chinese market. However, in general, we do not have a market situation where it's ideal to open new positions for swing trading. Hold on your energy stocks. There's a lot of them that could break out. Gold stocks, a lot of them are neutral. And utility sector is the only sector in the US that stand out, but build up your long position in that sector only gradually. That's the advice of the day. And see you tomorrow on the Swing Trading Show on decisionplus.com.